Hey traders, Raghee here. So I'm going to follow up on some of what we did last week, and that's just another call that is a pre-earnings play on a name that has, in this case, some NASDAQ implications. So let's talk about the NAS here in this recap video. And that is, I'm waiting for a pullback buy. Now on our spreadsheet, we're actually playing the 480-minute time frame because the daily's accelerated away from the conservative entry zone by over 100 points. And 100 points is significant enough where if I take a look at the daily price movement ranges for the NASDAQ futures, this is going to take a pretty sizable move to get back down there. So notice, I'm going to need just over a daily price movement range to even close that distance, actually a daily price movement range and a half. So what I do is I adapt to another time frame, in this case, the 480, that can still manage a 80 point, 90 point pullback and maintain the uptrend. In fact, I could even look at something like a 240-minute chart and say, hey, if we were to sell off by 90 points, by the upper end of the price movement range, 85 to 90, would we be able to maintain the validity of the trend? And even the 240 would be able to. So, going forward, I might adapt to a shorter term time frame because some of these have the ability to absorb that much of a pullback. Okay, now you notice the 180 doesn't. The 240 gets a little tight, right? It's only 50. If depending on if we punch up to higher highs, but the 480 should not be a problem. It's a little close, but it's in that vicinity around that 85 area. So we continue to focus on the daily, but that's how I'll gauge the volatility. So, whether or not these time frames can absorb just a daily or an hourly. I'd say the time frames that can absorb an hourly would be those longer term 120, 180s, maybe 240, but then I'd focus on the 480 for a longer term trend follow. But let's talk about what would trigger that correction. And this week we've got Netflix and PayPal earnings. Now, neither are heavily weighted names. They are, of course, in the NASDAQ 100, but they're not heavily weighted, meaning to me, top 10, even top 25 most generously. So what I'm looking for here are opportunities to play either strength or weakness, mostly weakness in terms of the pullback on the NQ, but individual setups on the stocks themselves. So how does a futures trader get interested in Netflix? Because of its psychological impact on U.S. internet stocks. So what we did this morning and into the afternoon was watch the fact that Netflix punched up to a higher high. And you'll see what we did here. We went with some at-the-money calls because of the new 52-week high, and that's called a Shockwave play. So if we can be anywhere above 200 tomorrow in the open, this will be a very nice play for us. The market's pulled back about 4 points already. We're trading around that 205 area. But this is a classic example of a Shockwave play where I'm looking to capitalize on, in this case, a 52-week high and taking advantage of what I think could be movement to the upside. So that's what I wanted to share with you guys here today. We did a number of these plays for the past 4 or 5 days now. We'll continue to do more of these going forward. Next week is going to be a massive earnings week. So if you're interested in more of these Shockwave plays, how they affect Netflix, but how they're also going to affect, and think about the earnings next week, Amgen, Celgene, Amazon, Comcast, Google, Intel, Microsoft. If you're interested in trading those kind of earnings alongside the NAS, you're going to love what we're doing next week. All right, so that is today's recap video. I'll see you in the next update.